Hey everyone, how's your portfolio doing today? Hey, Jake here with Chain Genius, back for another episode. And the markets are down. And there's probably not even a good reason for it. Looks like in the top 50, you pretty much have reds everywhere, some marginal greens, with the exception being for the 7-day average of Omasego on their recent news release and partnerships, as well as the Digix DAO, which to me is actually pretty interesting. Since Digix DAO is tied to gold as an asset, it's a very stable, low-risk commodity play. And it kind of makes sense for those that don't want to leave or trust Tether that they're able to move out of the market somewhat by being exposed to a less volatile asset. And, the episode is going to cover a lot of what I call fudsters and moon boys. Basically, everyone is trying to push the market and manipulate it in some way because we're all incentivized based on the bags that we hold. One of my friends in the space, Geo, who, when it comes to technical analysis, I trust pretty much across the board, said that it's not surprising kind of the price action that we're seeing. It's mostly technical in nature, and it's generally because there's been a lot of consolidation around that $12,000 Bitcoin, just above $1,000 in Ether, especially right after those blow-off highs that we had from last month. And it's reasonable to expect resistance, according to him. It's not going to be unusual to see sideways movement in his mind for a couple of weeks, if not a few months, before we try to attempt to break those all-time highs. And if you look at the price growth, going back just to the beginning of December here, we were at just over $300 billion market cap. And in the span of just over a month, we went 2.5x across the entire market. And that's just not sustainable. Doesn't matter the asset class. So it's healthy and it's normal to see a correction like this. And, the biggest pullback was down a couple weeks ago to almost those pre-bull run highs right at the beginning of December. And now it looks pretty typical of what I would consider a consolidation. And I think that's really healthy to have that sort of consolidation. If you chart from before the bull run until now, it's got a much healthier growth curve going on. And it's also being affected by everyone that's in the market. Everyone has an incentive to either FUD or moon and push their own agenda. And this is a great example that you can see here. Since we're in the Chinese New Year, year of the Doge, by the way, may he deliver much wow and such profits. But with the Chinese New Year, a lot of money stops flowing because part of China shuts down. That started on February 16th and will be continuing through the end of this month, beginning of March. And this article is a perfect example of that from Stop the FUD, where there was a recent memo from an employee at the People's Bank of China that talked about upcoming regulation and crackdown, and it turned out to be a hacked account. Basically, someone at one of the retail branches had their accounts hacked. Allegedly, it was not to their knowledge, and it just talked about that cryptocurrency trading and ICOs, including forex exchanges, we're going to have a big crackdown. We've heard this many times before, and it turns out that a hacker had actually gotten a hold of this person's account and sent out this memo. And the problem is with this sort of stuff is this memo got picked up by Business Insider, Bitcoin.com, even China's official Xinhua News. Apologies if I'm butchering that. And it caused a lot of damage to Bitcoin, as is to be expected. And generally, this is just someone trying to drive FUD so they can buy Bitcoin at a better price, buy the dip. You can also see this with Tether. There's just a tremendous amount of FUD and uncertainty around them, which unfortunately causes a lot of uncertainty and FUD in the rest of the crypto space at large. And there's a couple things. They did get subpoenaed. They had a break off with their auditing team. Those are knowns. Whether they're doing wash trading, whether the Tether is actually backed by US currency or not, yet to be seen. And for me, a project like Bitfinex and Tether are almost too high profile to be this stupid. That being said, I do believe that they probably had something going on, like maybe they issued too many tethers because of the market bull run, and then they had to kind of catch up with the profits that they had made. But Bitfinex is wash in revenue. They're making money hand over fist, and with them or even Binance making over $1 billion in revenue, or Coinbase and GDAX, it just doesn't seem that big of a stretch for them to have $1 billion or a couple $1 billion in reserves. Again, since I can't prove that, it doesn't really matter. But the idea is there's still this uncertainty, this FUD, which affects the market at large. To continue things getting weirder in the whole FUD and uncertainty space is Venezuela's deciding to launch another Petro coin. This one's called Petro Gold, because the first one, which if it wasn't weird enough to try to save the flagging economy, was backed where it was 1 barrel of oil price is equal to 1 Petro. They're now releasing the Petro Gold coin, which is going to be tied to gold. The issue with the Petro original is that it was allegedly backing oil that was yet to be drilled. So in effect, it was kind of a futures IOU. And the issue with this is, besides all the sanctions that have been placed on Venezuela and Maduro, the president, as at a whole, it's hard to believe what's really going on with the state of things. And it's also hard to not see it as more than a money grab. For U.S. investors, since there are sanctions, I would recommend being careful, because it could be seen as basically an extension of credit to the Venezuelan government, which would be seen as circumventing these sanctions that have been placed by the U.S. So don't buy the Petro, or do it at your own risk and best judgment. The other thing is, when the Petro was actually sold, they did a private sale where there was a 60% discount on the public sale price, and the government and insiders held a portion of the Petro tokens off of the table, just like a lockup that you would see for traditional ICO. And the problem is, without knowing anything about that, is there any way that they just aren't going to flood them and sell them on the market? Again, people are acting silly, just trying to get rich, cause fear, drama, moon boys pushing the market the way that they want. You know, on a happier note, though, the RobinHood app recently launched live crypto trading in 5 markets for Bitcoin and Ethereum. You can watch up to 16 others. You can't actually trade them yet. But the real cool piece about this is, if you're in one of those 5 markets, which is California, Massachusetts, Missouri, Montana, New Hampshire, what's really cool about this is they're doing no-fee trades. So this is going to compete directly with Coinbase, which I think is healthy. I think Coinbase in general needs competition. They built a great user app, but it's kind of expensive from a fees standpoint. So I think this could be really cool. And something else that I really enjoy is whoever their designers are at Robinhood are on point, because the cryptocurrency section is a Tron theme, and it's just really slick. So if you haven't checked it out, I highly recommend it. Take a look. Even if you can't trade, you can at least follow some of the top coins that they have listed. And I'm interested to see where that goes. So the other thing I wanted to talk about today was forks on forks. 2018 is going to be the year of the fork, most likely. It's an easy way to create something out of nothing. You saw this with, or you're going to see this with Z Classic and the upcoming Bitcoin Private. Ether Classic's having a fork with Callisto, or it might be an airdrop. Litecoin had the Litecoin Cash fork, which effectively was times 10 of Litecoin, which itself was times 4 of Bitcoin. So Litecoin Cash is times 40 of Bitcoin. And it initially popped up to about $9. Now it's hovering at about $1.40 at the time of this writing on CoinDesk. And what's interesting is currently only Yobit is listing them, the exchange, which Yobit is a bit of a dumpster fire at times, and I get where they're coming from an incentive standpoint. If there's trades to be executed, exchanges make money, so they are economically incentivized for that. But at the same time, if exchanges would stop listing all of these forks, the forks wouldn't be coming out unless they had actual merit. So it's interesting to see how a lot of these probably are going to end up being money grabs, but at the same time, you will see legitimate forks coming out as well. So there was Litecoin Cash. The other one is for those that are big fans of such Dogecoin, Year of the Doge for China. Doge Ethereum is going to be coming out. This is not a true hard fork from what I've understood reading. Is the Doge community has been working on a scaling solution called TrueBit. And what TrueBit basically does is they want to create a method for you to send Doge to Ethereum's blockchain and back. So it's effectively acting like a side chain. And the new token coming out is going to be called Doge Ethereum, Doge X. based off of the Doge Ethereum bridge, which is what TrueBit is that I was talking about. And what's really interesting about this is it's really expensive to move coins off of one exchange and back to the other. And what they're trying to do is fix that through this TrueBit scaling solution. And what they need to do is, the most computationally expensive piece is that when you lock up your Dogecoin and send it to Ethereum, you need to prove from Ethereum that you own those Dogecoin, and vice versa. Ethereum needs to be able to prove that you own those, or Dogecoin needs to be able to prove that you own those Ethereum, and that's expensive. So what TrueBit's trying to do under the hood here is take that expensive proof mechanism off the chain. So this could be really interesting. You know, as memey as Dogecoin is, this could be a cool idea because TrueBit's a lesser known scaling solution that might actually be able to work. Not quite the same as atomic swaps, but a similar idea. You basically lock up your tokens on one chain, and then that gives you a derivative on the other chain that lets you use smart contracts, handle your executions as needed, and then you unlock said Doge back after that's been finished. Yeah, so another Reddit post. I can keep my Doge. I send it to the Ethereum chain and back again. And I'm guessing few coins fixed supply help Ethereum scale up. One other thing I wanted to talk about is Monero forks. Recent scam and garbage that is Monero V came out, and watch those privacy keys, my friend, because the controversy around Monero V is it's basically just an inept dev team going for a money grab. And, you know, the only one that Fluffy Pony fully supports is WowNero, which I highly recommend you check out. It's basically super duper scalable, like beyond scalable, and it's just got a sick logo, and one Monero equals 10,000 WowNero, and I highly recommend you check it out. So if you want to buy and sell or trade your WowNero, you can actually go to localwownero.science, which I'll leave a link to all of these below in the about section for the video. And for those that think this is actually a serious fork, it's not. You get rickrolled if you click on anything anywhere in the website. So that's all I've got, guys. Thank you so much for checking out my video. Until the next time.